Hey everyone, welcome back to Curious Combo Trading. Hope you all doing great. Hey, today we're going to dive into the DAX and how it moved yesterday, Tuesday on February 18th, and how I tackled it with my double stochastic strategy, or did I? If you're new here, I trade using a combination of the fast and slow stochastic indicators to catch the best momentum entries. A quick disclaimer, this is not a financial advice. I'm just sharing my trading thoughts and experiences for educational purposes. Always do your own research and trade responsibly, okay? So let's talk about a little what was happening in the broader market. The S&P 500 hit a fresh all-time high, shrugging off Trump's latest political moves, while European indices, including the Stoxx 600, followed suit. Defense stocks were popping, Intel surged at breakup rumors, and Asia lagged a bit with Japan reporting a trade deficit. So bullish sentiment overall, but did that translate to a solid trading opportunities with the DAX or the markets in general? Not really. So looking at the 15-minute chart here, let me open it up for us here. My slow stochastic was hovering. The US Open was about here, and the European market opened the pre-market here, dipping deeply into the oversold territory all the way in the early afternoon before it started recovering from 22,722 points. You could draw the line here. This is the support where it catched up. So after that, it really consolidated here around 22,863 and 80.83. This is the range now on a 15-minute chart. Kind of classic ranging behavior, and if you've been trading for a while, you know how tricky these sideways markets can really be. Yeah, so first of all, overbought stochastic with no real pullback, kind of separation zone here, both on the 15-minute and 1 hour charts. Let's look at the 1 hour, what it looks like on the stochastics. Yeah, so but overbought stochastic on itself isn't a sell signal, but when the market is ranging with no clear momentum shift, it's a big red flag for me to just, stay patient and sit on my hands. And second of all, flat price action, I would say that we had a breakout move earlier, but by the times I was looking for entries, the price action had really flattened out as we spoke here. So around the early noon, it was all gone. So no strong volume, no clear momentum, just a lot of choppiness. So in my strategy, I want to see a fast stochastic dip into the oversold here, what it did, and cross back up while the slow stochastic is trending up. That setup never fully developed after the early start. So I prefer to enter after a proper retracement, not in this kind of no man's land. The market teased a little pullback, but didn't really commit. So I wasn't about to force any trades. So, and I think we just got to remember that patience is a position too. So between a consolidating market and no strong catalyst, even in the economic calendar, I decided to sit on my hands and this one out. And this is exactly why it's really important to stick to your strategy. If I had forced a long trade just because an overall bullish sentiment, I'd probably be sitting through a lot of chop and even a fake breakout. So instead, I waited, and that's what keeps trades profitable, consistent. So was yesterday frustrating? A little, but I think it was the right decision overall. And hey, so let me know in the comments, did you trade the markets yesterday? And if so, how did it go for you? And if you're new to the double stochastic strategy, check out my other videos here, where I break it up all down and step by step, and so you can see what I'm doing here. Thank you for watching. Don't forget to like, subscribe, and hit the bell so you don't miss the next video on my daily videos. I'll catch you in the next one. As always, you stay patient, stay disciplined, and happy trading.